Tuesday, we are going to bring you a fun little tax tip. It's really not a little tax tip, it's kind of a big, important tax tip, but hopefully you shall appreciate what we're going to be talking about. We're basically going to discuss like how to stay out of jail. Seems helpful. Yeah, I guess let's just get into it, yeah? Hi, I'm Bette Hochberger, CPA, CGMA, and today we're going to be talking about how tax planning to avoid taxes is totally legal, but tax evasion is like really criminal and can land you in jail. So I usually like to tell clients that we'll keep them out of jail. We will never give you advice that falls into the realm of tax evasion. So what kind of gets into that murky world of you want to pay less in taxes, but you're going to get yourself in trouble? There's a few key things. And basically the thing to realize is if you're lying about your taxes or anything affecting your taxes, that's tax evasion. And that's not what we want to do, right? So real obvious things are, ignoring or not reporting income. Yeah, that's a big no-no. Making up expenses. A lot of times people say to me like, oh, well, how many expenses can I take for my type of business? And there's not like an amount that you can take for your type of business. There's what you actually spent money on that you can deduct. And then there's lying about it. That's kind of how it goes. As long as you can justify what it is you're doing in your business, then it's real. Claiming personal expenses as business. Just because you use your business accounts to pay for personal expenses doesn't make those personal expenses actually have a business purpose, right? I see a lot of times somebody will have a business card and they'll go shopping, and then we have to ask them like, hey, I see these expenses for like Target and Macy's and whatever the case may be, and it's not, necessarily normal for the type of business that person has. And we have to ask a little like, hey, what is this? Is this an actual business expense? And if it's no, I went shopping and that's the card that I used, well, using the business card doesn't make it a business expense. It has to have a business purpose. So trying to push off personal items as business items, that's another no-no. Sham transactions, right? Making up transactions that you're trying to pass as something for business that really isn't. Like, I don't know, like say you take your dog to the vet and you try to claim it's a medical expense. No, that's a sham transaction. It's not real. It's not legitimate. It's not deductible. It's tax evasion, right? But at the same time, tax planning and tax avoidance is completely legitimate, right? And in this case, we're not making things up. We're not lying about our expenses. We're not lying about our income. We're managing them. So for example, tax avoidance. If you know you have a big amount of income coming at the end of the year, right, in December, if there's a way that you can make sure that income hits in January instead, that's tax avoidance for the current year. You're kicking that can down to next year. We'll deal with it next year. But for this year, it's going to lower your taxes. And the corollary to that is expenses. If you know you've got a big expense coming up in January, if there's a way you can accelerate it into December, that's going to be more expenses in that year and your taxes are going to be lower. That's totally legitimate. That is not tax evasion. That's tax planning and tax avoidance. Credits, making sure that you are claiming credits that you are entitled to. One big one that a lot of our clients end up working with us to get is what we refer to as the R&D tax credit. Really, it's the increasing research and development tax credit. And if you're in an industry or you're doing the type of work that you qualify for that credit, you 100% are entitled to claim it and to use it to offset your taxes. So again, tax avoidance, totally legal. If you're lying about it, though, that's tax evasion. That's no bueno, as they say. Also, knowing what deductions you can take for your business. So it's not an issue of, how much office expenses can a business like mine take. It's documenting things that you are legitimately spending money on in your business and making sure you capture that. So, for example, business travel, right? There's a right way and a wrong way to business travel, and you need to make sure you document it properly. Meals, it's not really meals and entertainment. That's kind of what we say, but entertainment's not deductible anymore. That's an important thing to know, but meals can be. And again, you have to document it the right way. So here we're making sure we maximize our legal deductions, not making anything up, because making it up is tax evasion, which is the bad one, but this is going to legitimately lower your expenses. Now, there's other things that we can do when it comes to tax planning and tax avoidance. For example, your entity structure. We've talked about this in other videos, like are you an LLC or an S Corp or a C Corp? How you're structured can also affect your taxes, and as long as it's a legal structure for what you're doing, there's no reason not to do the one that's going to save you the most money. So at the end of the day, tax planning for tax avoidance, yes, we love it, we do it, we help clients with it all day, every day. Tax evasion, you're going to have to go somewhere else if you want to do tax evasion. We will not help you with that one. I do not want to visit you in jail. And that's about it. If you have questions about tax planning or tax avoidance, drop it in the comments, schedule an appointment, shoot us a message, whatever it is. We're happy to work on tax planning to legally lower your taxes. And we will see you next time.